So, welcome to part three of this video. This is crazy. So, my audio for part two on the second half of the video had cut out in terms of, I should say audio, my mic stopped recording. So, yeah, it was great. So, I went through it all thinking it was recording, but it actually wasn't. So, I just had the screen recording, but I didn't have my voice explain what was going on. And I didn't feel like doing a voiceover on it, trying to predict what I was gonna go to next and all that without, obviously seeing. So it's gonna be part three, continuing on for the charts. Let's go ahead and try to, zoom through this before any other unforeseen circumstances come along the way. But I do appreciate you guys looking at part one and part two. Hopefully you guys got some insight into how I look at things and how I navigate and go about looking at charts. All right, so we're gonna go continue on with SMH. So this is one of my favorite ETFs, and I think should be a very strong core position in any portfolio. Definitely it is, and this is in my son's portfolio. Just love SMH because semiconductors, you know, all these companies, they're great companies that's in there. You don't know who's gonna be on top, who's gonna be the winner, things of that. You got Nvidia, obviously, who's the face of AI and all that, basically face of that semiconductor industry. But a lot of great names in there: TSM, AMD, um, even ASML is part of them with the EUV machines they got going on. So semiconductor space is a great space, I think, to be invested in. Even if all this AI stuff wasn't going on, we need chips regardless. So it powers your phones, powers your TVs, your cars, your laptops, anything that's pretty much an electronic device for the most part will have a chip in it. And then this ETF covers them all, covers the foundries, covers the fabs, covers those who are just creating the designs. So it covers the whole pipeline of the semiconductor stuff for the most part, right? So let me go for our ranges here on the daily chart. We got 276 to 354. Obviously, you see we're still way above all those ranges and also above all the SMAs. Got the RSI right here. We're at 59. So you see recently we were in overbought territory, so kind of came down a bit. And then for our MACD, still showing some upward momentum, but it is weakening, as you can see by its faded green candle. It is weakening out, probably going to flatten out or turn downward. But again, as you always said, we hit an all-time high. Look for some exhaustion, look for some pullback to happen after hitting that, okay? So we'll go to the weekly. Weekly, still showing the same thing, obviously, all-time high. Chart is looking very nice in terms of how much strength and how much momentum it's had to the upside. Ranges, we're looking at 144 to 269. That's a good range to start building positions into. Very well above all the moving averages still. RSI is showing overbought at 74. MACD still showing some upward momentum. Not strong, but still some, decent upward momentum for that stock. But again, SMH, definitely one of my favorites. Definitely something I feel like a lot of people are slept on. They know about because of what's going on in terms of the AI trade and all that, but I feel like even before that, definitely a good ETF to have in your portfolio. So we'll go over to the next, Caterpillar. If you've been keeping up with the watch list that came out the first of this month of January, you will know that Caterpillar is one of the new additions to the watch list based on, its impact and its place in the AI race and the AI space in terms of from a building standing component, also an energy component as well that a lot of people don't know about for the generators. Caterpillar definitely looking forward to see what it's gonna do over the next maybe year, 2 years, however long it stays on the watch list. Because again, I don't have a timetable how long I keep stuff on the watch list. I usually get rid of items on the watch list if the story changes. You You can see on there I've had a Wingstop before. I've had even names like I had a buy now pay later name, I think a firm years ago. So I had ChargePoint at one point in time. So it just goes to show too as well with that too. It's okay as an investor for you to pivot, for you to change over to other stuff, as long as you know why you're doing that change and what's driving that change. I'm a big person on if the story changed for that investment and the reason why you bought it, the conviction you have behind it, did the like moral foundation of that whole thing change for you? Then yeah, you should go ahead try phase out your portfolio, look to see where else to put your capital. So that's usually how I do my movements for it, and then for moving investments out of a portfolio. But Caterpillar hit a new all-time high for the month, right? So that range for it, for scaling into position for it, we're looking at anywhere between $413 to $555. So to get in there, and then RSI is at 62. So kind of you see from the angle here from the RSI line, kind of went down a little bit, but 62. It's not obviously overbought, but it's definitely decently removed from the neutral area of 50. And our MACD for the most part is neutral. Do see a little bit of green going on here, and the line is a little bit above, showing some upward momentum, but for the most part it's neutral here. And then you can obviously tell from this candle it's kind of doji like, so long wicks, or one long wick, a short wick, and then that small body. Then we go over here to the weekly. Zoom in on that. So for our weekly here, we do see still strong trend line up there, strong trend going upwards. For our ranges here, we have 241 to 404 for good ranges to start building position into if it ever was to fall to those prices. And then we do have RSIs at 74, so well into that overbought territory. Same with the MACD. MACD is showing upward momentum, even though it's not super far removed like this large gap as you've seen here. It is pretty close here, but still nonetheless some upward momentum still going on for the stock. And obviously as time will tell, again, all-time high. We keep an eye out for any pullbacks, any consolidation, sideways movement for a long period of time. Usually have to hit all-time highs. That's usually what happens for a while. As you can see here, this previous all-time high had some consolidation, then went up, then hit another all-time high, sold off, had some consolidation, went up, hit another all-time high. Then this candle here, you could kind of call consolidation because it says 5 days worth of trading data within here. And then boom, another all-time high. So you can look for that pattern usually to play out for most names in the space when they do hit all-time highs, right? So that's it for that one for Caterpillar. Let's go over to round this out. So we're going to be looking at our metals. As you all know, if you were paying attention to the market on Friday, so today, the day I'm recording is January 30th. If you paid attention to the market today, you know that gold and silver had a tremendous sell-off. Silver more so than gold. Gold, I think, ended the day off down 9%, and then silver was around 28%, 30%. At one point in the day, it was down as much, I think, at 32%. Very, very wild day for the metals. We can look here with gold. So we got our ranges here that I like to look for. So anywhere between 298 and 387 is good prices to go ahead and start building position that I'm looking for. That's what I'll be looking for and paying attention to. Obviously, you see these two red candles that formed here. Again, big sign right here. We had all-time highs. That also kind of leads to why the pullback happened. Even though there's more behind that besides just the all-time highs. But all-time highs, always keep in mind, pullback could happen. Sell-off could come around the corner. But also, we did have the announcement of the new Fed chair that's going to be coming in after Jerome Powell, and his name is Wash. So make sure I know it's between the Kevin and the Kevin. I just want to make sure I'm saying the right Kevin. It is Kevin Warsh. Yeah, that's correct. Kevin Warsh. So he's going to be the new Fed chair after Jerome Powell's tenure is over. So reason why we had this sell-off, so speculation behind it and reasoning behind it, and the thought is he is more of a hawkish Fed. So after reading up about him, I saw an article on CNBC that read about his like past takes about stuff because he also has some like Fed governor experience being in those roles, and I think at one point too he was appointed something for one of the presidents, like one of their assistants on some type of situation where he was assigned to. But he's also been very vocal about like rate cuts, things like that. So he's hawkish in terms of he's against rate cuts. So I think it's a pretty interesting dynamic that for someone like Trump who wants rate cuts to appoint someone who has a portfolio profile about him being outspoken on rate cuts, like in terms of being negative and against it. So it is pretty interesting that he did choose him. So I don't know. We're gonna look at him. Is he going to change his tune, become a yes man for cutting rates, or is he going to actually play hardball as we see with Jerome Powell, kind of staying firm in his choices and things like that. And also we do also know that he probably will have some people on his side when he does become Fed chair, because we did remember from our last, not this one, it just happened this week, but the rate cut before that. Because we had a rate cut decision. Obviously, this week we didn't cut rates, so that was like expected. But before that, when we did cut rates, I think there was 3 votes that were against it. So there are already some people in the Fed governor's camp in the FOMC that are already against cutting rates. Like they think our last rate cut shouldn't have happened either. So there are some people that's in there already on that train of thought and that thinking. And if Kevin Walsh comes in with that same mindset, you can look at rates not being cut for a while, right? And then that's going to start the whole rates higher for longer rhetoric and da 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 da, all this crap that usually comes along with all that. Even though we have been cutting rates, but they're going to, this is the new baseline now. They can be like rates are going to be higher for longer. So, and also to take into account too what his thoughts and take will be probably on this phase of quote unquote QE that we're in, that they're not calling QE. Some people have been referring to it as light QE or light quantitative easing, because we do know that money is being injected into the repo market to help out with these liquidity issues with the banks. So, we are having money injected into the economy, but just in a different way, different format than we're used to. They're not calling it quantitative easing, but be interested to see what his take is on that as well. So, say all that to say that this is hurting the debasement trade, right? So we know that the dollar's been weak. People have been selling off the dollar, fleeing from the dollar, and also there's been this whole sell America trade story that's been going on for a while, which is another reason why you've seen these commodities run up. You've seen gold and silver run at a blistering pace, outperforming the market by a landslide. Triple digit returns over the past year, and we're looking at gold and silver, right? So a lot of that is because the dollar is weakening and the weakening of the dollar, right? So a lot of people have been fleeing to other assets, these quote unquote safe haven assets like these. But you have someone coming in who is probably going to, I guess you could say, help strengthen the dollar, stabilize it based on their policy and how they're going to look at stuff. Hey, do I really need to flee to gold? Do I really need to flee to silver? If the dollar is going to, at least stop dropping and probably gain some strength, gain some momentum, I probably don't need to put my money into these other assets. So obviously a lot of money is still in there, right? Because again, look at the run up. A lot of money is still in gold and in silver. This is just viewed as, for gold, about 10% correction. For silver, I know 20% equals a bear market, but that 29%, 30% sell off, it hurts. Trust me, it does. But it's still strong in terms of the whole trade. It's still a strong trade, right? Now it's just about who's really hurt. Like I said, gold. If you bought it here at 509, you're kind of hurting a bit because you're at 444, right? And then when you look at silver, you're gonna see, thing is at 109. Then right now it's at 70 something dollars, 77. You're really hurting there too. Yeah, about 30% loss in income. I mean, loss in investment in your portfolio. That's obviously not good. But again, that's why we don't chase highs. We chase discounts, chase moving averages. That's what we're here. And then that's the best way to navigate and go about it. So we're gonna go over here and look at our weekly for gold, and after that we're gonna close out with silver. So over here for gold, still way above all the moving averages. Range here 191 to 285. And then we have our RSI. Even though that selling off we saw on the daily chart, right? RSI is still showing overbought. So still strongly in overbought territory at 73. MACD is still showing some strong momentum to the upside, especially strong because you see how dark these green candles are down here. So definitely still showing some strength in the trade. But this is kind of like your yellow light, right? This is kind of like showing you, hey, some caution. Again, all-time highs. Look for some exhaustion. Look for, okay, what's going on here? Kind of slow down a bit. Especially, we have all these things confirming that this is a very hot trade. It's at a very hot point in its life cycle in terms of this trade, right? So things to keep in mind of, don't be this guy. Get in at 509. All right? Just keep that in mind. So let's go ahead, close out with silver. SLV. So we got silver here, and then obviously you can see this chart similar, but definitely looks more drastic in terms of the drop, right? Because now we even got a gap in between here, and then you can even see here these two trading days wiped out basically. Yeah, almost wiped out the whole month of January. No, I think it did. Pretty much wiped out the whole month of low 66. No, almost wiped out the whole month of January. But yeah, it's crazy. But you can see here, let's go ahead and knock the ranges out. $37 to $55. If it falls to that, start, good position. For me, I would start, building a position into it. And then we got right here, we got the RSI. You can see this deep dive right here. So RSI is at 45. RSI is at 45. So that deep dive showed up right there. And then we got our MACD as well. Still on the upward side of it, but we see that sharp dive into it, into the red. We see that fading green. So it looks like this is going to definitely turn over, start showing some downward momentum. So definitely be on the lookout for that. For the silver, and again, don't be this guy buying at 109.83 because you keep thinking it's going to go higher and higher. Everyone along the line here was thinking that. Turns out their thinking was right until at one point it's not right. That's what happens. Bought at 109.83, fell to 75.44. So when it does reach this high, when y'all see a high, that means someone bought at that price. All right, that's how we get these new highs. Someone paid that market price for that investment or that name that you're looking at. So then let's go ahead, look into the weekly for it. So for the weekly, this is something I will consider potentially to become a mother bar here because of how extended the bar is. So definitely keep your eye out for next week to see when the week starts off, where it starts at. So I'm looking forward to start within here and then probably be stuck in here for a while. Probably more than a while, probably for multiple weeks at a time. Because for realistically, if the sell-off is for these reasons, the debasement trade going away a bit, Kevin Walsh and his hawkish policy or viewpoint on cutting rates, things like that, there's not really no really catalyst for this to run back up to break these highs, right? And also the fact that it's been so extended for so long. So look for it to stay within this candle, keep trading sideways, or for it to break down, which I feel like it'll be, rare for it to happen because based on research I was looking at for gold and silver, so gold and silver kind of usually move in tandem. If gold's running up, silver's going to run up as well, and silver will surpass gold on the run up. And then on the drawdown, gold will draw down, silver's drawdown would be more than gold. So if gold's down 10%, as we've seen here, gold's going to be down 30%. Stuff like that. So silver runs farther and also drops farther than gold will, right? But they still will have their nice run ups and they still will have their drawdowns, right? Just be on different magnitudes. But the thing is, for both of them, they don't really end up in situations where it's like free fall. Like as a stock could end up in free fall, or ETF could end up in free fall, where it's like a falling knife. Gold and silver usually quickly stabilize, quickly find the bottom, and then either consolidate, and then there's a situation. Hey, I can start accumulating, build my position there. So definitely look for this to probably stabilize quickly. I'll be surprised for the most part, especially on the weekly chart, if we see like I don't know 5, 6 candles in a row. That's meaning like a month and excuse me, a month and a half of selling off. That would be actually pretty. I don't know. There'll be something deeper going on if we do see all that selling off, right? So for the most part, like I said, there's still a lot of money still in these trades, but obviously people are taking profits. Story may be changing. We don't know. It's just people trying to front run it, thinking, right? But in terms of, is it a good time to buy? Is it attractive? From my point of view, no, because again, I don't look at, this for silver, yeah, for sure, because of the percentages, right? Yeah, silver at 28%. I would buy that personally. Me personally, I would buy that because it falls right into my thesis of percentages, and also it's even beyond my thesis of that. I for sure will go ahead and allocate some capital to it because of that one thing. But everything else is showing that it's still very hot in terms of your MACD, in terms of your RSI still being pretty high, and then again how far removed it is from these moving averages. But silver, based on that, gold, if it held that 10%, even up to 15% down, yeah, definitely give a look at it. So, and for fun, before I close up, I didn't do this in the last recording, so let me add this to it. Cop X, which is it's a miners ETF, Global X. They're not too bad. They have a lot of pricey expense ratios. I don't really care for all that, but copper, if you wanted to look into that, just to get some insight on how copper performed today too. Same thing, copper fell crazy, exactly 10%. So you can see here, got that little gap formed right here. Same with copper. Copper prices will be $49 to $67 to go ahead and build that position. You can see here when it hit that 50-day, it was a great opportunity, bounced. Same thing here in the past, about 50-day, almost a 100-day as well too. Hit that, obviously went on to a run. So copper, reason for copper is pretty much everything has copper in it, especially these AI data centers being built out. A ton of copper is involved. Your home has copper. Copper is a great conductor of electricity. Pretty much everything has copper. So that's why the copper trade is also going crazy as well. We start seeing obviously them space out. You got gold, you got silver, you got copper, probably even got palladium and all these other things that people are talking about. But those would be the top three I feel like to pay attention to. Then we got our weekly. Definitely see this going kind of crazy over here. Ran up nicely on the weekly. And then for this, you got $34 to $48 for that range. And again, on the weekly, very, very strong in terms of RSI. So very, very overbought. Seeing in MACD is still strong, even though it's fading right here. But that separation, but it still got some good strength on copper as well, even though with that sell-off going on. But that's all I have for you guys. Again, this one definitely was shorter because it's wrapping up one of the other videos that lost the audio on it. So to close out, definitely appreciate you guys tapping in and checking it out. Um, Please like, comment, subscribe, leave anything down in the bottom if you want any stocks, ETS you want me to look at. I can pull a chart up for it too. We can discuss it, see what I see, and talk about it. Don't forget to go to the website, thewealthcatchers.com. Watch list will be coming out February 1st for all the stocks, entry points, prices, narrative about what happened this past month, in the month of January, what we're looking for February, and just my insights on the market, what I'm expecting to see, and how things will play out. Have any questions or concerns and pick my brain, you can send an email to thewealthcatcher@yahoo.com. Again, I'll leave all this information linked in the bottom for the website, things of that nature. Think about anything else. I think that's all I have for you guys. Again, do appreciate y'all tapping in. And I do appreciate you guys watching the videos and just spending your time with me. I do appreciate that. Definitely helps out. You find this information valuable or helpful in any type of way. Like, comment, share with your friends, share with family, things of that nature. Again, I'm always available. I'm here to try to educate, give insight, information, stuff like that. Something I do enjoy doing. And again, appreciate you guys, and always remember, catch and secure your wealth. All right. Have a great day.